Hi folks, today I want to share with you a list of 10 companies I selected to buy in the second half of 2023. So let's get to the list. The first one is Applied Industrial Technologies, ticker AIT, is a leading distributor of industrial products and services. With a strong presence in North America, they offer a wide range of components, including bearings, power transmission products, and fluid power systems. AIT serves diverse industries such as manufacturing, mining, agriculture, and more, providing essential solutions to keep operations running smoothly. Their expertise in industrial technology and customer-focused approach make them a key player in the sector. As we head into the second half of the 2023, AIT consistent growth and commitment to innovation make it intriguing stock to watch. I don't know all these companies. I selected them by my filters that I constantly updating and improving. So they're first of all really good at financials. So they are not well-known companies such as Microsoft, Google, or Amazon. And I need to learn myself about their business. So I have to read what I found about them. So sorry for that because I don't remember everything about each company. But at least I just want to share with you what their business is about and what they are going. And now let's take a look at the chart and financials of the company. So I'll be showing you two screens, one for Google Finance, another one for TradingView. The TradingView is the best charting tool worldwide, I think, because from what I saw, almost all brokers use their chart or widgets or their services on their platform, on the broker platform to show you a price chart or all that stuff. So what I found just the way how they represent the charts and some stats or fundamental statistics about the company, a little bit different between Google Finance and TradingView, so I decided to show you side by side. But anyway, let's just take a look. So first of all, what you can see, it's a little bit better on TradingView. For different time periods, they show you performance of the company. So for example, the whole time since the inception of the company, they made 22,000%, but I'm most looking for the last 5 years and last year just to understand like how we are going. And anyway, you still need the full chart to see how company is performing and whenever it's going down or up or sideways. But as you can see, it's constantly growing, so that's why I decided to select this stock. So let's take a look at the 5 years. So as you can see, it's growing. So and same here, if I click on 5 years, you will see same chart. And one thing before I continue, don't just blindly go and buy a stock. I'm usually buying when it drops a little bit from the previous high. So look for these drop downs like this, and this. So probably you need to wait a little bit because currently market is going down. So we might see another small drop down, and yeah, after that you can buy it. So, but let's take a look at the Google Finance first. So if I scroll down, you will see the company is mature. It's actually celebrating 100 years since inception this year. And their statistics is really nice. Everything is growing. You see all green numbers. And most important one is net income and net profit margin. The net income is like a net income, the money they have after all their debts, after salaries, just net income. But more important, net profit margin shows you that they are improving the way how they are making money. So their percent of profit margin is also growing, and this is two key factors I'm looking at usually when looking at the company. So and the next statistics we will find here, if on TradingView, if you scroll down a little bit, as you can see. From the technical perspective, the signal is buy and analyst rating is strong buy. So looking at all this data, as I said, I selected by financials, then chart, then technicals, and also other analyst rating. And from all these factors, it seems to be this is a good company to buy. And from financials, you will see that there was a drop during COVID in 2020, but since then the net profit margin, which is yellow line, is growing. And yeah, and also if you even more scroll down, the purple one or red one is going down. This is debt, so they are decreasing their debt, and it's also good. And the last one is earnings. Green means that actual earnings beat analyst expectation, and the red one it means vice versa. So analysts projected and higher the income of the company, but the company didn't meet the expectations, so that's why it's red. But for the last 3 years, as you can see, the actual earnings beating analyst expectations, and projected for 2023 is higher than before, so I hope this nice growth continues. But now let's take a look at the next company. Federal Signal Corporation, ticker FSS, is a prominent company specializing in safety and security solutions. They design and manufacture a diverse range of products, including emergency sirens, fire trucks, and industrial signaling devices. FSS serves various sectors, including municipal and industrial customers, law enforcement agencies, and first responders. Their products are vital in ensuring public safety and enhancing emergency response capabilities. So this is really interesting company, and also a little bit different business compared to the first one, because my devotion and like a move of my portfolio to diversification. I don't like the idea to buy everything from the technology sector because it's really nice and everything is rising. No, ideally the portfolio should consist of stocks from the different businesses and different locations. So now let's take a look at the chart. So as you can see, the chart is not always rising, and it was time when company was falling, and it was quite long, almost 15 years. But anyway, for the last decade, it's growing. So if I switch to the 5% gain, and also you'll see the same here, it's 156%. And my target for today was to find the companies who made over 100% during the last 5 years. So let's take a look. And same as mentioned it last time for the previous company, you need to wait for a small pullback, and it's actually starting. So I would say this is a good time to buy, maybe at 60, maybe 55 if you are greedy and believe that company will drop a little. So I mean company stock. But anyway, this is a good to buy. And let's take a look at the financials. So as you can see, everything is rising except the net profit margin, which dropped just a little, like 0.33%. And I think that's not the big deal, because anyway, all other financials of this company are fine. So I would suggest you to take a look, and now let's take a look at the other statements and charts and graphics. So as you can see, technical says natural, because the currently company is going down a little bit. So anyway, as I said, I'm more looking at the fundamentals compared to technicals, because they might be analyzing short-term goals, and I'm more mid-term or long-term investor. So anyway, my take here is this is a good buy. A good company to buy. So, and also regarding the net profit margin, yeah, it was going down for a couple of years, but since 2021 it's going up, and hope this year it will go up even more. But we see that the increase in their debt, which might not be a good sign, but looking at the earnings, they are increasing, and projections for this year, it's also it's higher than the previous one. So as always, I say in investing, don't believe anyone who tell you just buy something. Do your own diligence and check yourself whatever company or stock or crypto you found or suggested by anyone, and only after that, if you think this is a good one to buy, just do it. And this is a perfect example. So not everything is really nice, but at least from my filters, from the financials, the company was kind of recommended to buy. That's why I added to the list. And yeah, let's move on. The next one is Cintas Corporation, ticker CTAS. It's a renowned company that specializes in providing essential services and products to the businesses across various industries. As a leader in the business services sector, Cintas offers a wide range of solutions, including uniform supply, facility services, and safety products. They cater to organizations of all sizes, ensuring a clean, safe, and professional environment for employees and customers alike. Cintas' expertise in enhancing workplace productivity and safety has generated them a strong reputation in the market. So that's why we are looking at the company and come back to the chart. So this is really true. As you can see, the stock is growing constantly because that decade from 20 to 2010, it was kind of volatile market, or at least stocks were not so popular after boom of 2000. But lately everything is going up. If I switch to 5 years performance, you will see it's made a little bit different numbers. According to TradingView, it's 144, but Google Finder says it's 140. Anyway, this is a really good percentage for 5 years, and even looking at this year, it's almost 18%. So this is nice. Let's scroll down and take a look. And yeah, it's also founded quite a while ago, over 50 years, so it's a mature company. Actually, I didn't look at the FSS and didn't tell you. Yeah, FSS is also even older. It was founded at the beginning of the previous century. But let's back to CTAS. So as you can see, all financials are green. So net income, net profit margin, revenue, and all the other parameters are growing. So from that perspective and standpoint, this is a good company to buy. And look at the technical analysis. It's also natural here, I guess, because it's drawing a little bit. Yeah, it's drove down a little bit. But from my perspective, what I told you, this is a good time to buy instead of just buy at the peak and then see when company is going down. I mean, it's a stock for a couple of percent. So. And the other financials, so here we see net profit margin more or less the same as before, but they are still profitable. That's why the company showed up in my filters. And let's take a look at the debt. Yeah, they slightly decreased their debt compared to previous one. And as you can see, this is 2021 and 2022. So there is no data yet for this year. We will see later. In terms of earnings, only in 2021 the actual earnings were less than expected, but other years were green, and this year it's expected to be a bit higher compared to the previous one. And now next move to the next one. The next one is Fastenal, ticker FAST. It is a well-established company that operates as an industrial and construction supplier distributor. With a vast network of stores across North America and beyond, Fastenal offers a comprehensive range of products, including fasteners, tools, safety equipment, and generator suppliers. They serve a wide array of industries, including manufacturing, construction, and government agencies. Fastenal's focus on delivering high-quality products and personalized service has made them a preferred partner for businesses seeking reliable and efficient solutions. So let's take a look at the chart now. Same here as the previous one. The company made quite a lot of money since its inception. While it's not so old as the previous one, I mean, not the first companies I showed you, but anyway, it's almost 50 years. My math is not good, but you got the idea. It's quite a lot. Time passed since it was incepted. But looking at the charts, especially 5-year chart shows you 100%, which is enough for me to take a look at the company. And also it was going down for a year because of the war, but almost since the beginning of this year, or actually it was October, November last year, market seems start to be recovering, and company started to grow. And if you looked at the max range, we will see that in long term the company is growing, so I expect this to be true. And same here, if we take a look at the shorter term, currently it's a small drawdown, so I will expect the technicals for the company to be natural, but this is a really good time to buy. And yeah, let's take a look at the financials. So here we see everything is green except net profit margin, which is down a little bit, but still, as I said, I found this company by my filters, and all of them show that this is a business which will grow despite that small drawdown in net profit margin. So let's take a look at the other data, what we have on, and scroll back here to the chart. So technicals says you sell. This is interesting, but okay. Anyway, I found the company, so I will keep it. And let me take a look once again at the charts. So because I think for the last month it's going down, or maybe not showing as good performance. The technical says is going to be down, but for me it's just a way or switch in mind to think when something is going down. For me it's not like, oh, everything is going down. No, this is a time when I'm buying because this is a discount, when you can buy a good company at a discount, and that one was found using quite a restrictive filters about their profitability, about like various factors. So for me, just even if it goes down, I will just buy it. So let's take a look at the other stuff we see here. So analyst says natural. So let's see other stuff. As we can see, net profit margin slowly growing, which is good. And yeah, debt increased a little bit, maybe because of that. The analyst rating and technicals shows you the company is going down, but we'll see. And looking at the earnings, the last one is projected to be higher than the previous one, so I still decided to keep this company in the list because all other factors, I mean financial, says that it's going to be up. Next one is Quanta Services, ticker PWR. Is a leading company in infrastructure services industry. They specialize in providing comprehensive solutions for electric power, natural gas, and telecommunications networks. As a prominent contractor, Quanta Services offers a wide range of services, including engineering, installation, maintenance, and repair of the critical infrastructure components. Their expertise spans various sectors, including energy, communications, and transportation, making them a key player in important essential networks nationwide. So, yeah, that's it about the company and company description. Now let's take a look at their charts, I should switch it to all time. So as you can see, the company was quite old. Actually no. As you can see, the company is relatively young compared to the previous ones we saw before, but we will see even younger company in the list later. I will show you, but let's not jump too far. So as you can see from the graph chart, the company is going just like regular. I wouldn't say the results were really nice or even more. It was going down quite heavily, but since end of COVID, it started to rise really strong, and as you can see, there were no huge downturns. So for the last 3 years it's going up and really steadily, and that's why I selected the stock. So that's interesting. They changed something in their business, so I think it worth to invest something, maybe just a small portion of your portfolio, for sure, not go all in just one company. And yeah, now let's take at the financials. So as I told you, the two main parameters, at least for me, net income and net profit margin, they are going up, but earnings per share and EBITDA, it's going down. So as I mentioned previously, same with all other companies, do your diligence and decide, check the other opinions and check their stats. But at least that company showed up for me in my filters that kind of worth to invest to, because in long term, people and I think it will be going up. So let's take a look at the technicals. And yeah, as you can see, the technicals and both analyst rating both are buy signal. So that's why I think it showed up. But unfortunately, the net profit margin is going down and the revenue is going up. So it's kind of opposite signals whenever you should buy or not. The debt went up in 2021, and in 2022 was more or less the same. So we will see what will be in 2023. I see that net income is really small, just 3%. But anyway, the estimated earnings of the company projected to be green, and as you can see, since 2019 the company earnings beating their expectation. So I guess that's why company showed up, and I hope it will continue to grow and everything will be nice and shiny. And now let's move on to the next company. The next one is Lincoln Electric Holdings, ticker LECO, like LECO, is a renowned company in the welding equipment and technology industry. With a legacy spanning over a century, Lincoln Electric is a global leader in design, development, and manufacture of welding products and solutions. They cater a diverse customer base, serving industries such as construction, automotive, aerospace, and fabrication. Lincoln Electric innovative welding technologies and comprehensive range of equipment made them a trusted partner for welding professionals worldwide. So now let's take a look at the graph for the company and see if it worthwhile. And what I should say, looking at this really nice green graph without huge downturns for like century or something, I think this is a good one to buy, because for the last 5 years it was growing, making over 100%. And for a year it was like 41%, and year to date 35%. And as you can see, it's in slight drop down right now. So for me it's a perfect time to buy, because as I said, I didn't really like to buy at the top. And let's take a look at the financials here. So from income statement, we can see that the net profit margin unfortunately went down, but all other factors are green and growing. So let's take a look at the analyst rating and technicals. So as you can see, technicals show sell. My main take here, because company is going down, usually technicals are lagging. So if company is going down, it should sell. It tell you you should sell. If company is going up, it tell you you should buy. But in reality, when market or when a good company is falling, you should buy and not sell. That's why analysts who are more understand the stock market and how it behaves and understand that in the long term is going up, so it tells you have to buy. And looking at the financials of the company, we can see since COVID time 2020, net profit margin is growing. And yeah, I'm not sure why year-to-year change is negative here, but at least as per trading view, it's growing. And here we can see, unfortunately, the debt have reason or had reason. My English is not as good. But at least earnings are beating the expectations, and since COVID is going up, and for this year is projected to be a little bit higher than the previous year, and hope the earnings will beat expectations, and yeah, the stock will continue to rise. And now let's move to the next one. Next one is AAON, and the company name is same as the ticker on exchange. So it's a prominent company in heating, ventilation, and air conditioning HVAC industry, specializing in design, manufacture, and distribution of high-quality HVAC systems. So it caters to commercial and industrial customers. Their product line includes rooftops units, chillers, air conditioning units, and other energy-efficient HVAC solutions. So their commitment to innovation, reliability, and sustainability has earned them a strong reputation in the market, and that's why I think the price of the company, of the stock, is constantly growing since inception. And there were a few downturns during the COVID time, but in general, let me show you, everything seems to be okay. So yeah, as you can see, since inception, they made over 100,000%, which is a lot. If you invested even on the monthly basis using a dollar cost averaging strategy, you would make quite a lot of money. So let's take a look at the financials. And as you can see, everything is green. Over year changes is green and growing. So from that this perspective seems to be okay, and you just go and buy it anytime. But let's take a look at the other financials. So technical says you have to buy, and analyst says the same, you have to buy. So I would follow their advice, and let's see financials. Financials. The net profit margin is went down after COVID, and now is slightly going up, but their revenue is growing. So I guess that's because this company showed up in my filters. But unfortunately, their debt went up quite heavily. And another few things to note: earnings for COVID time and post-COVID was less than expected, but previous year 2022 earnings were higher than expected, and this year expectation is higher than 2022, and I hope the real earnings will be higher than expected. So we will continue this green line of earnings. And now let's move to the next company. The next one is XPEL, and same the company name and ticker name, same as the previous one. So it is a dynamic company that operates in the automotive aftermarket industry, specializing in automotive paint, protection, and window film solutions. So XPEL offers innovative products designed to protect vehicles from various elements such as scratches, stone chips, and harmful UV rays. Their paint protection films and window tinting solutions cater to both automotive enthusiasts and everyday drivers, enhancing the appearance and longevity of the vehicles. So, as a leader in the industry, XPEL commitment to research and development, along with their dedication to quality and customer satisfaction, has positioned them as a top choice among automotive professionals and customers alike. And I believe this is really true, because looking at their recent performance, I was impressed, because it was more or less like flat price for almost 2 decades, but since 2020, the price started to rise, and for the last 5 years they made almost 150%, which you can see on both charts in Google Finance and TradingView. Now let's take a look at the financials, because as I said, I didn't buy company because of just nice price charts. First I look at the financials, and then look at the charts. And here, as you can see, everything is nice and green, growing, nice, so no questions here. Now let's take a look at the technicals and analyst rating. Here we can see sell for technicals. Let me take a look at the closer chart, like 6 months. Yeah, I think because during the last months the price is going down, and yeah, that's why technical shows you sell. But as you see, even during this year it's made already like 34%, and during the year it's 26%, which is much higher than average deposit in the bank. But analysts know that when a company is going down, you just have to buy it because it will pay you off. For example, if you didn't look at the technicals and bought here and at the price of 60, and you can sell it at 80, which is 20%. Yeah. Anyway, this is just a good profit. So, and now let's take a look at the financials. As you can see, net profit is growing continuously, same as revenue. This is a probably perfect graph that we should be looking for. I mean, green here, green here. Only thing is that is worries me, but no company is perfect. The debt is quite high here, and their earnings are lower than expectations. But still they are growing. So as you can see, yeah, the analysts predicted earnings to be higher. The real earnings were lower, but still the number is growing, and I'm not sure what will be in this year, but at least the numbers are growing, so that's good. Now let's take a look at the next company. The next one is Heritage Crystal Clean, ticker HCCI. It's a notable company operating in environmental services industry. As an environmental solutions provider, HCCI offers a range of services focused on collecting, recycling, and managing hazardous and non-hazardous waste materials. They serve various industries, including automotive manufacturing and industrial businesses, helping clients meet environmental regulations and sustainability goals. The company commitment to the environmental responsibility and waste management excellence has earned them a strong reputation in the market. Their services such as parts cleaning, waste and oil collection, and hazardous waste disposal play a crucial role in the promoting a clearer and greener future. So now let's take a look at the chart of the company. And as you can see, this is a relatively new company, founded in just 2007, but still going up. And since inception, it made almost 240%. And during the last 5 years, it's made 90%, a little bit less than I usually selected. Like I looked for 100%, but it's still really good performance for the company. And yeah, now let's take a look at the financials data. So as you can see, everything is green except net profit margin, which is dropped quite heavily, like 7%. But still, as I told you, this company appeared in my filters. So let's take a look closer at the other statements and recommendations. So despite the net profit margin decrease, technicals and analysts says this is a good to buy company, and financials also shows you, and it's also kind of discrepancy in data between TradingView and Google Finance. So that's why I told you always check out yourself that net profit margin is growing. At least it was growing or more the same, like 1183 and 1195. So it was slightly growing for the last 2 years. I will see what will be this year, but their debt increased quite heavily. And during for this year, their earnings expected to be lower. So that's why I told you check out yourself. So you might want to skip this company or might want to buy if you are a longer term investor. So let's take a look at their charts once again. So as I mentioned to you, I don't really want to buy at the peak. So you might just want to add this company to the watch list and don't buy straight away. If price will go down heavily, something like here, which might happen, as you can see it going sideways. So you might you might buy it, for example, at the price of 40 or something like that. So if you are using limit orders, you can put your buy limit order at the price of 40 or even less, like 37. And yeah, when price is going will go down to this level, and the order will be executed, and you will buy like a strong company at a lower price. The last one is Performant Line Productions Company, ticker PLPS. It's a reputable company operating in the energy and the communication industry, specializing in designing and manufacturing products used in construction and maintenance of overhead and underground power lines, as well as the communication networks. So it serves a diverse range of customers worldwide. Their product offerings include hardware, fittings, and accessories that are essentials for installation and support of electrical and communication infrastructure. PLPS high quality and reliable solutions have earned them like a name, is a strong position in the market. As a leading provider of energy and communication products, PLPS plays a vital role in ensuring the efficient and reliable transmission of electricity and data. Their focus on innovation and commitment meeting the evolving needs of the energy communication sectors and position them as a key player in the industry. And yeah, after recent changes, when in Europe a lot of companies have to rethink their approach to the how to say, the gas or oil spendings, and where they will take power for their business, and maybe use green energy or transfer like from different sources, electricity not just from one source. That's why I think recently the company price just soared, and let's take a look at the price chart. So as you can see, I just click at max to show you the graph of the price, like for all time, and since inception it made almost 1000%, or I should say slightly over 900, but still it's going up really nicely, and especially during the last couple of years. For the last 5 years it's made 100%, and during the last year it's almost 200%, and year-to-date performance is over 100%. So, and as you can see, the growth of the chart is really stable, so there are no downturns. So that's why I decided to look at this company closer. And financials tell you the same, so everything is green and rising. So from that perspective everything is okay. So now let's take a look at the technicals and financials. And technical says you to sell, and let me see why. Not sure why, because the price is not going down. I mean, the market is going down right now for a couple of percent for the last couple of days, but we'll see. What else do we see here? And sorry, I scrolled a little bit too much. And yeah, despite the technicals says you have to sell, or it's kind of natural, financial says that everything is okay. And it's interesting that we don't see any analyst recommendation, because maybe this is not a really big company, or I don't know, but anyway, as I said, the company appeared in my filters, so that's why I decided to share it with you. And for you is a task to check yourself whenever it's good to buy. And net income is growing, so also profit margin is growing. That I told you, this is one of the two most important parameters for the company, but unfortunately during the last year I see free cash flow went down, so it's up to you to decide, like, whenever you're going to buy or no, but I think in the long term they will work out and continue to grow, because all other parameters told me that this is a good company to buy. And yeah, and that's it for today. I expected the video to be much shorter. I hoped it to fit in 10 minutes, but unfortunately it takes some time to read company description, share my thoughts about company financials without diving into details, because if I do a deep analysis of each company, the video would be I don't know, like a couple of hours, or I should do it like one company at a time. I mean, one video per one company. If you're interested in such videos, let me know in the comments. And yeah, if you just newbie to the investing or trading, feel free to subscribe to this channel, like the video, ask any related questions in comments below. And yeah, I'm planning to start some other kind of platforms, maybe Discord channel. I have one, and yeah, just thinking like how to and when and where to share my ideas about what to buy, like which company I think is a good one. So yeah, just let me know about your any ideas, what you want to hear from me. And yeah, that's it for today. So have profits, good rest of the day, and see ya in the next video. Ciao.